Okay, so now we're on a real chart environment and I'm going to show you what this looks like for real. First things first, what I'm going to go over is I'm going to go over resistance when broken becoming support. So y'all remember that scenario I gave you on the drawing pad. In the previous video, we talked about how price has a rally up higher, it finds resistance, and then after finding resistance and declining higher, failing to move higher, it resumes its trend higher and then ends up breaking that level of resistance, right? Making it a level of support. And then what you'll see many times is price will come down, test that level, reclaim it as support, reclaim the previous resistance as support, and then you'll see the trend resume. So that's a common scenario that you'll see play out here. And that's the first thing I'm going to show you. Okay, so I'm going to show you what that looks like with this price chart. We have an example right here. See this? It was a very shallow pullback, and like this isn't ideal for me personally. I would like it to pull back into a discount marketplace, but it's still a good example of resistance being broken, becoming support. So you can see right here, this was the absolute high that price hit before it declined and moved lower. Okay, so it's important to know each level of resistance will have that swing high level. See how you got your highs in the middle, two lower highs on the left and the right. That we had that swing high level right there. That was the absolute peak before price declined, making that our level of resistance. Okay, so you can see price then came up right here. We had a big surge higher and we cracked that level of resistance. Okay, and then we had a little shallow pullback. It reclaimed it as support. And then boom, you get a nice move up higher off of that level. That's an example of resistance being broken, becoming support. All right, so now that we covered that, I'm going to show you the other side of the spectrum. So what was the other definition of support that I gave you? Well, the other definition of support that I gave you was support is an area on a price chart where price has failed to move lower in the past. So it finds its bottom and then it moves lower, making it an established level of support. So what a lot of people will do, I don't do this personally, but what a lot of people will do is they'll just find random bottoms. Like they'll find, like for example, they'll see something like this. They'll see this bottom get put in on GBP USD right here, and they'll say, hey, that's a level of support. So I'm going to try to get my entry as close as possible to that bottom to minimize my risk, to maximize my reward, and then look for that move up higher. I don't believe that is an effective way to trade. Just trying to catch every single, or trying to get your entry as close to these bottoms as you can because, well, there's sell side liquidity right there. So I don't believe that's an effective way to trade. I'm going to tell you how I use support. We're going to zoom into the 15-minute chart. All right, so whenever I use support like that, meaning the lowest point that price hits prior to reversing, whenever I do that, I need to see a shift in market structure. So 1 second, I'm going to put in some data dividers so we can kind of clean this up a little bit. You can see right here, let me just remove that other level. So you can see right here, this is a level of support. Why is that a level of support? Because that is the lowest point that price reached prior to reversing. And if you recall, when we were on the drawing pad in the previous video, what did we say support was? It's an area on a price. It's an area on a chart where price has failed to move lower in the past. This is an area on a chart where price failed to move lower in the past. This is the absolute bottom. So you got this swing low level right here. You got your lowest low in the middle, two higher lows on the left and the right, which will be the criteria once it does happen. And it will be the lowest of that price swing prior to reversing. Now, again, I don't just like see price, drop, and I don't try to just get my entry as close as possible to that level and then look for higher prices. That's not how I do it. I'm going to tell you how I do it. I need to see a shift in market structure. Put simply, I need to see a clean shift in market structure. So for example, we could see price was trading lower this morning. Like this all happened during London session. So you can see during London session, we had this move lower, move lower, move lower, move lower, move lower. And then boom, you get a shift in market structure, breaking these highs right here. See that? We have that swing high level right there and price broke it. It broke that swing high level representing that shift in market structure. Okay. Also leaving our what? Leaving our fair value gap confirmation. That was the absolute bottom that was put in. And then we had that shift in market structure. That is how I use support. So you need to pay attention. You need to pay attention to the absolute low prior to that shift in market structure. The absolute low of that price swing prior to the shift in market structure. I don't try to catch bottoms, guys. I don't try to catch bottoms. What I mean by that is I'm not interested in buying this while it's operating in a bearish market structure. So while this thing was moving lower, it was moving lower, moving lower, moving lower. Like I'm not grabbing it right here. For example, look at my cursor. I'm not grabbing it right here anticipating that that low is going to hold because it's still operating within a bearish market structure. I need to see that bullish shift. I need to see that bullish shift before I become interested in the play, which we got right here. Once we get that bullish shift, we got that confirmation. I like using, then that level becomes interesting to me, and it becomes interesting to me not for an entry. I'm not trying to enter right on that level. It becomes interesting to me for a place to keep my stop. So again, on the drawing pad, we said support is an area on a chart where prices failed to move lower in the past. It failed to move lower here. And then it was followed by a shift in market structure. Okay. That shift in market structure, fair value gap, that's my entry confirmation. And then I enter into that fair value gap area. Once it trades down into a discount. And my stop, the best stop out point is going to be beneath the low, that level, aka that level of support. Whenever you're using support, like in this way, the best way to do so is to use the level of support prior to the shift in market structure. So we had a bullish shift in market structure, use the low, absolute low of when it was operating within a bearish market structure. Because what that ensures is, because if you are incorrect on the play, you know it's not a matter of putting your entry too tight. If you're wrong on this play and it was to come lower and take out this low, you know, like that would invalidate the market structure, which is how you want to keep your stops. That's how you want to keep your stop. You want to keep your stop at a point. You want to keep your stop at a point that when wrong, it invalidates the market structure. And it would invalidate the market structure for the trade below this level because that was the absolute low prior to the market structure shift. That is a very, 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 very key point that I want you to take note on. It's very important, okay? We're not trying to catch bottoms. I'm not buying this when it's operating within a bearish market structure. I'm waiting for the shift. And then once we get the confirmed shift, the confirmed confirmation, I get my entry, then I use it as a stop out point. But only after we get that shift in market structure does it become useful to me. So I just gave you both ways. I outlined both ways of how you can use support. Again, a little recap. We talked about this old level, aka resistance being broken, becoming support, which you could have bought and looking for higher prices. And we talked about the other scenario, support being the absolute lowest point that price reaches before moving higher. We pinpointed that right here. This was the absolute point prior to the shift in market structure, and that would be a good place to keep a stop. That's how I play it. That's where I keep my stops at. So that's how you do it.